Last night on LinkedIn, we noticed that SoFi had put up a new job posting for commercial payment services. And this prompted Tanner and I to immediately hop on a late night live stream to discuss SoFi's expansion into business accounts. Of course, business accounts is something that we've been waiting on for a long time, and it's going to be a huge step change for SoFi as a business. During this discussion last night, we went further in depth on the connection between Galileo and SoFi with regards to a product perspective, because SoFi is a B2C business, Galileo is a B2B tech arm powering that business. And it goes without saying that there's a lot of synergies, but also a lot of potential drawbacks of having this structure. The following is a time-stamped, edited down version of the most interesting parts of our conversation with my added commentary. And I've also added visual aids where necessary to make sure that you get the full context of what's going on with SoFi behind the scenes, including their new job offering that they posted. Enjoy. Of course, before I go into this video, I just want to make a call out that if you do enjoy this video and you want to see more, subscribe to the channel, share this video out with somebody who you think might benefit from watching it.
We saw SoFi post a new job posting, compliance officer for commercial payment services. This is not the first time that we've seen SMB banking style different job offerings. We've seen about 4 now. And it's not just this one job, they're also applying for multiples of them.
One thing that surprised me looking through all this was just the frequency that SoFi is consistently hiring across multiple different geographies and multiple different verticals in their entire business. And
Whenever you start seeing commercial roles, very few and far between, but yet they're hiring multiples of them right now at the same time. Essentially, in this talk, they say, we're looking for a purposeful leader who is interested in building out the commercial payment services program for SoFi Bank. This includes collaboration with line of business partners, inclusive of Galileo Technologies. In my opinion, they are talking about clients for commercial debit and credit cards, assisting SoFi Bank and Galileo leadership with identification and onboarding new clients. Is this normal whenever you see new roles for SoFi Bank, but are also helping out Galileo? To me, I've always thought of them as mainly two separate businesses.
they are two separate businesses, but SoFi leverages Galileo. As a result of that, you could make the argument to say, okay, this job is going to oversee both of them, directionally speaking, as a new vertical or a new segment. But you could also make the even simpler connection to say, if I'm working with a software vendor like Galileo, it doesn't matter that it's under one umbrella, under one roof. I just need a role that bridges that gap, that maintains that relationship, because Galileo has their own roadmap. They have their own products that they're working on, their own verticals that they're expanding into, their own
Right.
channels. Does that mesh with what SoFi as a company is doing? Galileo is servicing many customers in addition to SoFi. So if you have this separation of church and state where you have SoFi executing on the B2C side with an independent roadmap and then Galileo servicing the B2B side with an independent roadmap, you need a point of communication to bridge that gap between those two companies so that SoFi can get its internal requests into Galileo and have those prioritized in the roadmap somewhat. So
SoFi's new product announcements have been pretty quiet, and I think that they're trying to work full steam ahead on getting SMB banking lines active. There are many new fintech companies that are doing this, right? Brex, Mercury are the two biggest ones. Novo, Lily, all these other ones that are going after SMB banking. The problem with those standalone companies is the same problem that Firm or any of these companies are having. They have to go out and acquire their own new customers, pay for them, and then offer them the service that potentially a larger incumbent player can just integrate buy now, pay later. In this instance, I think that it's super beneficial to SoFi that they have SoFi at work that they could instantly offer to SMB banking clients. They can offer the debit or credit cards that they offer and issue at SoFi Bank. They could issue their own cards, have them serviced by Galileo immediately. They could do secured, unsecured. Instead of going down the route of traders and brokerages that Robinhood is going down, SoFi has a real opportunity to go after offering normal banking services to a much broader range of clients. I think that we're going to see a launch here pretty soon. We keep seeing these job postings over and over and over.
they are a leading indicator on the piece of news that come out, because we know that a lot of the news has been in the behind the scenes building phase for a long time, sometimes years. The top 5 bank that they've been working for, the documents that then came out that showed the connection between SoFi and Citi, that was end of 2022. Even in the NBA news, right? NBA news broke in early February, and immediately, like a week later, they had all the branded materials. It was a perfect synchronization with everybody got their VIP invites in the mail, and this has been in the works for quite a while.
The Kathy Wood one, right? Whenever they brought on the venture fund, they said they were talking for a year before that happened.
Exactly, right? And so how do you find that out? Well, somebody has to do that work behind the scenes. The job postings are the leading indicator. The news that comes out, the press releases are the lagging indicator, right? Like that
Mm.
happens after the fact. These job postings give us hints towards what will come in the future. And we know that commercial side of the business is something that Anthony Noto has acknowledged. It's something that's lacking. I mean, tax is the other one where now we're focusing a little bit more heavily on tax because of Anthony Noto's hints that he dropped. And so, in order for them to become a one-stop shop and to vertically integrate that entire stack, like they need to expand these product lines.
The marketplace for business loans, they launched that without having business accounts yet. Why
Right.
do that if you're not posting to business owners? Or are they just trying to get a gauge for how many potential crossover clients that they could possibly get?
And I'd rather them actually do a lot of the work behind the scenes. And when they make an announcement, make it something that's big as opposed to making like 10 little announcements. You mentioned that they have the tech under one roof. And I think that's an interesting point because I mean, I work at a tech company and a lot of times, if they want to have Galileo as a self sustaining business model, they can find that the bigger opportunity might be in companies that are not necessarily like SoFi, larger financial institutions, more enterprise clients. What I'm interested in finding out more of is the internal workings of how they comprise their product roadmap and their initiatives in general. On one hand, you could say, well, SoFi owns both of them. So it would make sense for SoFi to basically get all of their requests in as a B2C business for Galileo to build out.
Sure.
Or Galileo wants to grow independent of the B2C SoFi business. So Galileo is going to try to pick off the lowest hanging fruit. And those might not be companies like SoFi. And so as a result, SoFi, the core business, might be waiting longer to get a request in or for a feature or for a new initiative from Galileo because Galileo is actually servicing maybe the legacy financial institutions, the ones that are doing the POCs with Galileo, those types of businesses. And so let's just say you have a city, and in order for city to move forward with Galileo, they want a specific feature. For the sake of example, they want buy now, pay later. SoFi, on the other hand, might not want buy now, pay later. Galileo then has to make that balancing act to say, okay, do we service city to move faster from a growth rate as a pure technology play, or do we always give priority to SoFi's asks because they're all under one roof? Generally speaking, you would service city first and you would try to keep those as two independent growth paths as long as possible, which means that SoFi might not be getting all of their requests from Galileo just by sheer fact of being under one roof. They have independent work streams.
Is that also why whenever we acquired Technisys that they said, hey, we'll probably be integrating this in 2025? Because it was my perspective that they were just trying to go after other clientele before they sort of self-serve.
Yeah, it could be. I mean, SoFi might not want to be the guinea pig to test out Technisys because it might not work immediately. And as a result of that, SoFi might see some disruptions. They might put their own growth rate at stake. They might put their own reputation at stake. And so they might want to test it out with some other clients in the market. And then once they have a confidence interval that their needs are going to be met, then they try Technisys. It's worth noting on this point, after we initially had this discussion last night, Chris Hager posted on X, quoting Anthony Noto from September 2023, where Anthony Noto mentioned the first job of the technology platform is to help us innovate faster than we otherwise could. In other words, SoFi CEO Anthony Noto sees the tech platform as servicing SoFi's customers first. The benefit of this, of course, is that it would allow SoFi to innovate faster. And a potential drawback of this, it goes without saying, is that it might hinder the natural organic growth of the technology platform because SoFi as a B2C business might not be the core user demographic that Galileo's entire structure is catered towards servicing. However, if we do subscribe to this idea that Galileo is just there to service SoFi's needs first above anything else, then it's a fairly easy mental connection to make to say that, well, Galileo has been working on B2C and SMB installment loans specifically over the past couple of months. Therefore, SoFi should be receiving them very shortly this year. Chris Hager in his post ends with saying that SMB products from SoFi, given this paradigm, would not be too far behind from a launch perspective, as much of the work behind the scenes has already been going on at Galileo with regards to installment loans, which we've reported from Galileo's perspective over the past couple of months. And so I think this nuance is very important to understand because while it might hinder Galileo's organic growth, the strategy, if I can just speculate, is that SoFi thinks that they can make up for it with SoFi's B2C business growing even faster than competitors and capture more market share that way. However, if we subscribe to Anthony Noto's comments in 2023 that the tech platform is just there to cater to SoFi's requests first, then we can also assume that SMB lending is going to be shortly following on SoFi because Galileo has already been working on it a couple months before. In my day job, I'm leading a product and design team. Right now, we're trying to achieve some pretty aggressive revenue targets that we can't achieve by organic scaling. And so we got to make decisions on what acquisitions we want to make. Obviously, we're conducting user interviews and we're trying to get a sense in the market of what channel do we want to expand into. And what we're finding is we have to strike a balance between complementary channels, but something that's also a very big bang for your buck for your ICP, right? For your user persona, your core user. For Galileo's side, for example, SoFi as a business might not be their core user persona. It might be much larger organizations. By integrating technicists in-house, they build out their moat deeper and deeper, but their main target audience might be much larger organizations than SoFi. And as a result, SoFi is going to be, they're going to be an adopter, of course, but not the first early adopter of all of these new product lines.
Think about it. They're probably at about 150 million accounts right now, and SoFi makes up for, in terms of debit cards on Galileo, less than 2 million. They're obviously servicing much, much larger clients.
Basically, once you determine the channel that you want to expand into, the complementary product that you want your business to adopt, then you have to make a decision of like, okay, what is the cost for us to go and buy, I don't know, a small $5 or $10 million company versus building out a team in-house? And what is the time required for that, the resources required for that? What could go wrong with that? What are some of the benefits? It's indicative why they're hiring all these product people, because a lot of the problems that they're solving are fundamentally product problems. Where do we scale? How do we make sure that we meet the most needs? What are the requests that our target market is requesting from us? And how do we make sure that we hit the biggest intersection in that Venn diagram of enterprise, mid-market, and SMBs? And they're all requesting some things in the intersection. Like obviously you want to tackle those first. What does that look like from a channel perspective? Not only from a feature perspective, like going a little bit more macro, and do we build that in-house or do we buy another smaller company? In the case of Technisys, they bought something, but in the case of, a lot of stuff, they're building it in-house. Like they're not going out and buying a small buy now, pay later company. They're building buy now, pay later in-house.
It is weird to me that all the products that they have been launching at Galileo have been very buy now, pay later focused recently. Is that where they're seeing the rush of where the market's going? Like, I wonder why they're pushing it out, or are they just easy launches for them to push out because they might already have a large percentage of the puzzle already filled in?
Internally, like how we make decisions is we just go through a prioritization matrix. And a couple of the vectors in that matrix are technical complexity. Is it easy to do or is it hard to do? How long will this take to do? And we weigh that against the internal proactive direction of the business. Is this the direction that we want to go into? So in SoFi's case, is buy now, pay later a proactive push that they're making to say, oh, well, the buy now, pay later industry is going to be 700 million, and we want to be able to capture that. The other vector that we make decisions based on is customer feedback. If everybody's asking for buy now, pay later, then obviously that's going to get prioritized higher in that work stream, in that roadmap. Once you put all these things together, then you can sort of make a weighted decision in terms of, do I build buy now, pay later now, or do I build it later?
Going back to SMB banking, to me, it doesn't seem commercial line and consumer is all too different, right? There's a bills aspect and a spending management and multiple cards. I wonder how far away from the core product that they already offer at SoFi to get out the small to mid-sized business products that they want to get to.
I think the first layer is really determining, are we doing that at the SoFi level or at the Galileo level? Because at the Galileo level, then all you're doing is you're enabling a lot of these functions through APIs versus actually building like a GUI, like a user interface for a lot of these initiatives. And then if you're thinking about like SMB versus enterprise, and you have to think about subsidiary management, you have to think about international organizations that have different books of business, and merging all of that up, you get different layers of complexity given just the sheer size of the business. And so what they're looking for is quite different. I've actually worked on accounting software just on the side on their product team, and you would be surprised, man, the asks that they're looking for in terms of what they want in an accounting type software is very different. And so for the banking side, it would be equally as diverse in terms of the product offerings that they're looking for. And so coming back to this idea of who is their core target demographic, that will really give you an indication of what their product might look like.
I'm talking more on the SoFi side specifically. Business Marketplace is one of their newest products that they've recently launched. They deal to a more affluent user. It just seems to be the direction that they're more pointing toward as being their next largest product launch. Because from what I'm hearing, level one options and these sorts of brokerage services that they want to launch are not coming till 2025. What is happening in the interim? Are we going to go a year without potentially new products and they're just going to be working on the back end stuff?
So, if you're looking at it from the SoFi side specifically, initially what my mind goes to is that it's just an easy connection to make with their existing banking side of their business. All of these self employed individuals don't have alternatives for SoFi. And so that's just the next lowest hanging fruit. If you can get all of the self employed cohorts that are banking with SoFi and you can give them the same benefits from a checking and savings perspective that you have the W-2 workers at. And then on top of that, then you can provide them some services that are catering to their business specifically. Like technically I'm like a one person
Yeah, you're a small
corporation,
to mid-sized business.
but there's a lot more that sort of goes into it than me being just a W-2 employee. Like a W-2, you just get one form and that's it. And it's very simple like that. It's plug and play. Whereas for a corporation, there's expense management, there's all of this layers of accounting, quite a few other avenues that I have to jump through for me to essentially conduct the same business to come to the same conclusion. If you're thinking about it from SoFi, the B2C business, then it just unlocks an entirely new segment of the market. All of these people are unserviced right now. And if you want to close that loop, then you need to be able to service those people and provide them an offering that's enticing enough to make them switch over.
Do you think that this is going to be a product that we see this year?
I think if we don't get level one options, then either tax or SMB is on the docket for this year.
Yeah, but I just think about the opportunity the tax product has, which they've been talking about for 2 years, by the way, is not very high in my opinion. Whereas the SMB side is a completely,
Sure.
we're no longer reporting for three segments,
So
we're reporting for four.
again, think of it like of those three vectors that I laid out. What is the technical complexity of tax versus SMB? What is the business direction of tax versus SMB? And then what is the customer feedback, tax versus SMB? You could find out that the technical complexity of tax is way easier and is actually servicing a majority of the total addressable market because they have 7 million members. A huge portion of those members would have a tax product that's applicable to them. So immediately off the bat, you have a utilitarian sort of benefit. If I can hit 80% of my user base with a new product, and that's going to be much higher levels of adoption than if I want to roll out, let's say, an SMB product and then start from scratch to like build up more users.
Yeah, but most of these built on tax products, like what Chime is doing, what Wealth Simple, I just saw they have one as well. Most of the time, their free option, the core or basic level option, is the 90 plus percentile of what people choose. There's going to be a percentage of people that need, the audit support and all of this stuff and more complex solutions. But is that in the consumer side of the customers, or is that leaning even more towards the corporate or freelance side?
If the goal is to roll both of these out, and all we're debating right now is the order by which they're going to roll them out, there's way too much information that we don't have from the outside looking in that is crucial to making that decision if you're SoFi as a company. Now, with regards to this last point, the balancing act in introducing a new channel like taxes, for example, for SoFi, it's a cost benefit analysis, right? Because you have to measure the technical complexity, you have to measure the human capital, the entire time it takes to build something like this out, versus the adoption of that segment, which could also be measured in the form of cross buying into the other aspects of the ecosystem, the lifetime value of those cohorts, and the individual profitability of that segment as a standalone from a unit economics perspective. And once you assign a score to all of these parameters, like the drawbacks, the upfront cost versus the potential benefits, then you can quantify, is this strategy worth our time? Is this segment important? Should we do it now? Or is it important that we should do it later? Or is it not important at all, right? You can like break this out in an Eisenhower matrix and prioritize it that way in a very, very super simplistic point of view. One thing to add on for taxes specifically, which later came in as a comment from a viewer, was that taxes would also likely include instant refunds as a loan for a fee. And additionally, the fact that Lauren Stafford Webb used to work for Intuit, there's actually several different board of directors and SoFi management connections that worked for Intuit and other tax providers. So it's worth noting that SoFi has multiple different avenues for the tax product to even be a partnership to start with before they even build it in-house. And this goes back to our earlier conversation around build or buy decisions for product adoption in general. Having this in the form of a TurboTax partnership would, of course, have drawbacks for SoFi in terms of the flexibility from a product offering, the profitability perspective as well. the ecosystem perspective. However, the flip side of that is it would have benefits in the form of a very quick implementation, allowing them to move faster and focus on building in-house products that are more applicable to the core demographic, and as a result, just partnering off every complementary product offering in that ecosystem. Basically, to say that building all of this in-house can be a higher level of effort than the potential reward, the juice is not worth the squeeze, to Tanner's point, but to have it as a partnership to start with, not only can you have a faster go-to-market plan, but you could also do so by taking fewer risks and reducing that technical complexity, which then you can counterbalance the lower profitability that you can later have. So there's a lot of different levers here that SoFi can pull as a company, not only for taxes, but for all of their segments to consider from a prioritization perspective. And with regards to this build or buy decision, that should be considerations for us as investors from the outside looking in to justify some of the product decisions that are made internally. Anyways, I hope this video gave you some insight in terms of the product thinking behind the collaboration required between Galileo and SoFi from a new launch perspective. It seems as though SMB is a core segment that SoFi is thinking about launching and would definitely set them apart and work towards their mission statement of becoming this one-stop shop. So it's something very much in line with the business direction that they're heading in. It's just a matter of balancing the costs and the time effort required versus the potential benefits required, and doing that in a very thoughtful way to sustainably scale their business forward. Thank you so much for watching. If you do enjoy these videos, I urge you to subscribe to this channel and share this video out so that more people can view it. See you next time.